Rand Merchant Insurance Holdings, which owns stakes in companies including Outsurance, Discovery and MMI, recently warned that 2016 will be a tough financial year for them, given the low GDP growth, higher unemployment and increasing pressure on households' disposable income. But how are things looking for the share price? Joining us now from Cape Town to discuss the outlook for RMI is Finweek contributor Moshima Gama. Good to have you with us today on the show today, Moshima. If we take a look at RMI, a very diversified portfolio with some listed companies and Outsurance being the main one, which is in the unlisted space. But what do you make of its diversified portfolio?
Firstly, it's quite a good idea. It makes it quite attractive because what it does is at least disperse any potential risk that's involved in investing in one type of share. So although you've kind of invested your eggs in one basket, each egg has got a different division. Like you've mentioned there, you've got your medical insurance, your life assurance and your short-term insurance. So in other words, if one division tends to slack with financial results, there's a likelihood that the other one would try and bail it out. So it makes it quite an attractive basket of eggs because at least your risk is pretty much diversified.
What do you make of its new asset management business, which is cited to contribute to the bottom line by the 2016? Are you as bullish on this new division as you are on the separate insurance sectors?
Look, RMI in specific is kind of effectively involved in the financial markets in terms of the premiums that they get from their clients that they invest in the market. So they're now just bringing it close to home. So they're creating a one-stop shop, or rather disrupting the market, which is at least disruptive in a good way, that the traditional way that insurance companies operate. So they're trying to reel in all these good portfolio products just to at least beef up the returns, if at all their financials tend to slack. So they just pretty much bring it close to home and creating that one-stop shop that could allow them to at least reap better returns.
Looking at the share price, I think it's at around 40 Rand a piece, but what do you make of its valuation?
It pulled back quite a lot from March this year, so it's lost at least 20% of its value. But what makes it a bit attractive at this point is that it's edging closer to the upper end of its correction. So above 45 or above 46 Rand, that would make it a good entry point, with potential gains to at least 63 Rand mark. So if you were looking to get in, these are nice cheap prices. And generally, I do feel a bit bullish about the insurance sector, because there is a lot of, just on the fundamental side, a lot of upside momentum that could be reeled in just entering into the African space and having the per capita percentage increasing. There are more people who want insurance, so it is a good defensive stock in a way. So I would really say at least above 46 would make it a good buying opportunity with potential upside. So the long-term outlook is also pretty much bullish. So we should, be quite grateful about this pullback, because it then gives you a cheaper amount or a cheaper price to get in.
Buying on the dips. Moshima, I'm happy you touched on the African explorations and activity taking place there, because it does also appear to be quite a tough environment, with the likes of Old Mutual also trying to capture that environment together with Sanlam, if I'm not mistaken.
Right. Having to mention that, having that middle income brand increasing, they all will need insurance of some sort to at least insure themselves or at least against any risk. So that is quite a competitive space, but yet a growing one that could give them a lot of good returns in the long term. So I would really I would go from neutral to overweight with insurance companies.
And with Discovery as one of its divisions, are you also optimistic on its move now into the retail banking sector, also just a mix-up to diversify the earnings base?
Yeah, I am pretty bullish. I mean, if we have to talk about it in technical terms, they have kind of pulled back, which, like I mentioned, I still mentioned that getting in at a cheaper rate. They do have a lot of upside potential in the long term, and getting into those spaces is a mere way of finding ways to increase or to bring back better returns from what is, because it has been quite challenging for them, because people have had to then really, with their disposable income, try and nibble, cut back on a few things. But things are seemingly going to start looking up at least, and people would want to be getting more insured financially, or even medical insurance. So they're all making the financial sector quite attractive to get into as people start warming up.
Moshima, thank you so much for your time today and your view on RMI as a stock. That was Finweek contributor Moshima Gama. Up next, though, we unpack this week's cover story.